Hello everyone, and welcome back to this edition of the weekly video market update. We are back again with the regular weekly videos after a few weeks of being away. But we are back with the new theme and hope you guys like it. And as always, let's kick off this video with the topics that we will be covering today. The first headline for the week, the US dollar declined for 2 weeks in a row. For the first time this year, what are the targets? And the second headline for this week, we'll be talking about the US equities, which posted new all-time highs amid the earnings season. Will it continue this week? In addition to that, we will be talking about all eyes are headed toward the ECB decision later this week. What to watch in this meeting. Staying in Europe, we'll talk about the British pound, which soared over 1% at the beginning of this week. What are the targets and what's next for the pair? And finally, I would like to talk about my favorite topic for the year, gold, which is nearing $1,800 an ounce, confirming our bullish outlook mentioned a few weeks back. All of these topics we'll be talking about it in details after a short commercial break. Beginning with the US dollar index, as always. The index declined for 2 weeks in a row, and this is the first time this year that the index posts back-to-back weekly declines. The last time we saw this was back in December, and it looks like we will see 3 weeks of declines in a row if the index continues to decline until the end of this week. The index also broke multiple support areas, including the 200-day moving average and the 50-day moving average, reaching as low as 91.10 earlier on Monday. And this is the chart to keep an eye on what we're talking about today. The 91.10 represents its 100-day moving average, which should be watched also very carefully over the next few days or during this week, as a breakthrough that support would clear the way for further declines ahead. There were also multiple positive economic releases throughout last week trading, but it also failed to support the US dollar. This comes on the back of falling bond yields at the same time. The US 10-year yields declined all the way back toward 1.55, which is a sign that the bond market is starting to believe the Federal Reserve, who stated that inflation won't rise for a long time, But as for this week at least, any upside retracement in the US dollar is likely to remain very limited and likely to be limited below 91.60, which represents the 50-day moving average, while a breakthrough that support might break or might lead to a deeper decline, possibly toward 89.60. From the US dollar, let's move to the US equities. All major indices posted an all-time high or new record high last week, including NASDAQ. Dow Jones also, and if we look at the chart at the beginning of, beginning with Dow Jones, let's look at Dow Jones chart. The Dow Jones closed above 34,200 points for the first time ever, and as you can see on the chart also, it is way above all of the major moving averages, the 50, the 100-day, and the 200-day moving average as well. The S&P 500 also last week closed well above or higher and near its record high, around 4,185 points, and well above all the major moving averages as well. And finally, NASDAQ, or the NASDAQ 100, especially NASDAQ 100, it recovered and closed above 14,000 points for the first time ever, after a few weeks, of course, of declines, or a few weeks of sharp declines that we saw, and everybody was talking about a bubble, but it's actually not. And that decline was very healthy for the U.S. equities, or at least for NASDAQ. But such move is supported also by the earnings season, which remains strong until at least this report is released. But so far, it is very strong, and this is likely to keep the positive sentiment over the next few days, or at least for this week. But however, do not rush into any kind of positions, at least at these record levels, and I would prefer to wait for some sort of a slight retracement to the downside before looking into rejoining or joining the party in the coming days. Let's take out the Nasdaq chart and let's head into, from the US, let's head to Europe. Now, as we all will be waiting for some key events this week, including the ECB decision, which will be announced on Thursday. Estimates points for the time being, at least, points to no change when it comes to the main rate or the deposit rate, in addition to the current buying or the bond buying program. However, we will be also watching the press conference, which likely to be the key for the markets. In addition to that, also the inflation or the ECB inflation expectation for the coming period will be the key for the market. The ECB is likely to follow the Federal Reserve steps, and here by using a stronger language that any rise in inflation is likely to be very temporary, or as they call it, it's a transitory period. And this is in an attempt to calm the bond market. As for the euro, the pair also broke above the 1.20 earlier this week after breaking above the 200 and the 50-day moving averages a few days ago. Let's have a look at the euro chart here. And the most important level for this week, and we should be watching or keeping an eye on this week, stands at 1.2059, which basically represents its 100-day moving average on the daily chart. And it might be hard to be broken from the first attempt. I believe that we might see some sort of retracement to the downside first before the pair be able to continue to for further gains ahead. But at the same time, the technical indicators are strongly bullish, which suggests further gains ahead of the ECB decision. And again, as I said, it's 1.2059. We might see a retracement after that, or after testing that period. From the euro, let's go ahead and staying in Europe, and let's go to the British pound. The British pound, also the pair soared at the beginning of this week with over 1% on Monday, nearing 1.40 key resistance area, as the UK is also getting out of the lockdown gradually. The rally also comes after a notable stabilization period around 1.37. And why 1.37? It's a support area, and it is also 100-day moving average on the daily chart, while the pair also managed to break above the 50-day moving average on Monday. The good thing here that on Friday we issued a long signal on the British pound against the dollar through our written reports between 1.3750 and 1.3730. The pair declined first during Friday to that area before it actually closed the week higher above 1.38 and continued to rise earlier this week, reaching our entire targets mentioned in that report. But in the meantime, it is reasonable to close some of these longs positions while the final target remains at the time being, or at least at 1.40 for now, as technical indicators are also nearing an the overbought area on the daily chart. From the British pound, let's go finally talk about my favorite topic, which is gold. And I'm so happy with how the price action has been over the past few weeks. As we mentioned multiple times in our previous reports, gold may have bottomed out for this year after it retraced by over 61.8%, which was standing at $1,689 an ounce. And looking at the gold chart here, it also, that decline that we saw all the way to 1,689, it came before it started to crawl up again. It also broke that downtrend channel on the daily chart, as you can see on the chart. And this is when we issued the long signal between $1,730 and $1,725 an ounce. And since then, gold has been rising gradually, and it touched $1,790 earlier on Monday. Now, the long signal that we're talking about, or that we issued, is basically on not only on the short term but also on the medium term. And technically speaking, gold reached our entire short-term targets, while I would prefer to keep these longs for a few weeks and possibly also for a few months. And I'll be looking for more, or possibly for another leg higher above its 50-day moving average, and I will be looking for further gains ahead toward $1,800 an ounce and above in the next few weeks. And I'll be updating my targets and increasing my stops gradually over the next few days, few weeks, and possibly and hopefully over the next few months. This is it for this weekly video market update. I hope that you guys enjoyed it. Please subscribe to our channel to get notified once there is a new video on our channel. Also follow us, as always, as I say, follow us on our social media sites to get the latest economical thesis reports and analysis. And I'll see you again, once again, next week. Have a good one.